Well, good afternoon. You're watching the newsroom right here on ET Now. I am Ajay Sharma. What a rebound the market has actually made. There was a bit of a scare in the first hour of trade. Look at that sharp cut. And then it's not only recovered all that lost, but has tried to gain on top of it a bit. We're talking about a good 400, 500 point recovery on the Sensex and almost over 100 point on the Nifty. So good. There was a very sharp cut and there was buying which came in. Vinit Bolinjkar is here with us. Vinit, there was a bit of a scare in the morning. Market is elevated and it was a shakeout of sorts because I'm sure some short-term traders would have been shaken out of their stop losses, etc. What are you assigning to your clients on these kind of sharp cuts? Were you buyer or how are you reading this?
So, we continue to be secularly and structurally positive on the market. And, we are getting into that frothy space where we could see some kind of correction come in, which is very natural. After the market had rallied over 1,000 points, you would be expecting that to take place. My reading is that, where we have seen substantial runs in the market is where you take, where the froth has built up, you need to book your profits because, you're dealing with mid cap and small cap stocks which have gone up. And we should not let out of sight one of the factors that, the inflation is very sticky globally and, yields have started hardening. So, keeping these things in mind, I think the portfolio rotation should now go from very aggressive strategy to more of a slightly or, neutral on risk and, focus more on large caps and mid caps because I think that is how the rotation of the market will continue to happen.
There was a bit of a scare on ITC and it is also one of hell of a underperformer if you look at the larger scheme of things. And now coming in focus, would you be a buyer in ITC at these levels?
At every level, I think people underestimate the kind of results that ITC would be showing over the next few quarters. It is going to be your, just like what we have seen happen in Tata Motors, will eventually play out in ITC because it's a very, very strong consumption story. FMCG margins are going to expand marginally, but EBITDA has the potential to double from here, and that will really, really take the stock in the limelight. And if you look at the other segments, paper is doing really well. Prices of paper are up. Hotels is on an upswing with the revenge trade, and agro sector is also becoming a booming export industry for India. So all sectors firing on all cylinders. Cigarette continues to be a cash cow, and we are in a monopoly situation out there. And a lot of the selling pressure that is coming in from sources that we thought would never happen, that is getting absorbed, taken into the stride. And I think the consensus among people who are making memes on ITC is that now ITC is getting its mojo back.
Correct. There's a bit of a negative trigger today as well. We'll talk about that. Vinny is here with more on that. And I would like your reaction to what this possibility. Vinny?
So the tobacco stocks today are surely in focus, whether you see ITC or Godfrey Phillips or VST Industries. All these stocks seem to be under pressure today, especially after this is coming in, after the government has formed an expert group for taxation on tobacco and to suggest the rates for in the new financial year budget as well. So now this group is formed by health ministers also who will be giving their inputs on the comprehensive taxation policy for all tobacco products from the public health perspective, as well as suggest rates for the next fiscal year's budget as well. The panel comprises of health ministers, like I mentioned, representatives of the finance minister, GST councils, Niti Aayog, World Health Organization, Indian office as well as the health economists as well, which will be a part of this panel, is what is suggested and what we are understanding. So surely tobacco stocks are going to be in pressure coming in, that we could see some taxation or the tax policy on tobacco is what this group is going to be discussing, and pressure coming in on these stocks today.
Right. So this is a possibility which may happen in the budget. Vinit, the stock is scared out of shape, 5% down today. It has run up from 200 to 250. At 250, you are saying there is value in it. But are there any chances that between now and the budget, this may actually go sideways and underperform?
So, it's always very difficult to predict what the stock will do on a near-term basis. But having said that, we remain very, very convinced buyers on ITC for two counts. I believe that the ESG and the tobacco kind of trade and the investors, deep-pocketed investors who are sellers in these counters, all that has been absorbed. There is no incremental selling coming in. All the tired patient holders have also sold out. And there is a new there's a new breed of investors who has got into the stock and who believe in the growth story of the segment other than cigarettes. Second thing, what we have to keep in mind that the entire cigarette taxation has happened historically in the past over the last 20, 30 years. And that is a trend which is going to be there, and it plays out over a period of 2-3 years, So you have 1 or 2 years of increase, then you have 1 or 2 years of pause. And the GST revenues that come from tax collections from cigarettes are very, very strong. So government would also not want to let go on that. And secondly, tobacco exports is a thriving opportunity that has come out now. So I think there will be a comprehensive policy review. What would be the increase in the taxation on cigarettes would be difficult to comment on right now. But I believe that once this is in stride, once this is passed through and all have been taken into account, the stock will continue its run up.
Vinit, what else do you like in specific stocks from the research side? What have you been researching on?
So, we have been researching on stocks where there we feel is a lot of value. So we like a story called Gujarat Pipavav Ports Limited. It is one of the few ports in the world which is net debt free, right? And the only thing that is an overhang on the stock is that, their concession period is coming to an end in 2028. And they've applied for, renewing the concession for another 20 years, which will go through to 2048. So because of this uncertainty, because their concession has not been renewed, the stock is in a limbo and it is trading at distressed valuations actually. But what I believe is that, the management has taken up all the necessary works that are required when they did the first phase of the concession period. And given their exemplary record, I believe that will come through very quickly. So it's a value stock. It's an MNC promoter. And, in the DFC corridor, DMIC, there is strong growth in railway freight. Nhava Sheva is not coming up for another 2 years. So over the next 2-3 years, this becomes a very, very attractive choice given its parentage, growth prospects, and valuations.
From this, in the small and mid cap space?
In the small and mid cap space, we like a couple of stocks. We like Dollar Industries. I think that they have got their act together. They've done new branding, and the things are going to go through. So we expect the stock to play catch up. We are expecting a 17 to 19% CAGR in this space. Another mid cap stock that we like is Vardhaman Specialty Steels Limited. They got into a tie-up with Aichi Steel, which is a subsidiary of Toyota and the only vendor to Toyota for special steel products. Okay, with Aichi tie-up, the entire global market opens up for VSSL. And, if you take China Plus One scrappage policy and the move towards EVs, and they're also EV agnostic. So we believe that, their profits, which are at 44 crores in FY21, should go to 140 crores in FY24. So that is a significant, kind of jump that we are witnessing. And, at a P ratio of less than 10 over the next couple of years, I think you have got a small multi-bagger sitting on your horizon.
Right, Vinit. Thanks very much for your take on specific stocks.